All right, welcome back, everyone. We are going to continue with our Meet Kevin tracker today. If you aren't aware or haven't been watching the past couple weeks, I have been tracking Meet Kevin's trades, whether or not he's bought puts or calls, going long, putting his money into cash instead, and then his overall sentiment of his videos. And a lot of times he will actually say, I'm bullish or I'm bearish, right? So that makes it really easy for us to track. And then what I like to do is actually compare his pick to the technicals, because while news and macroeconomic news is all very important, the issue is that oftentimes news follows the trend and not the other way around. A lot of people that are a lot more credible than me have agreed to this. I would direct you to Everything Money and Paul, and the success that he has had in the market. He will back that up as well, and he has said that many times. So while I think it is very important to follow macroeconomic trends and news, a lot of times the impact that those have are already factored in, as far as sometimes really good news in a bullish market will skyrocket a stock, while bad news really won't hurt it that much, or might hurt it for a day or two, and vice versa in a more bearish market, right? So you want to look at the overall environment, but when you start getting too detailed into things, you're gonna end up with, yarn all over your basement wall with pictures connected everywhere, and it's just going to be too much of a disaster and confusing to efficiently trade. And that's one of the reasons why I have been tracking Meet Kevin's trades. Now, I will give him a little bit of credit right now. He was bearish back in July 11th. He then flipped to bullish on July 31st, then bearish. So I will give him a little bit of credit for being consistent, mostly because out of the 1, 2, 3, 4, 5, 6 trades that, or call outs that he's put out there, 5 of them have been have been bearish, right? So I'll give him a little bit for consistency. However, if we dive into some of the notes here, and I want to maybe reorganize this so it's just easier to look at as far as, the little notes I have. He was right to go bearish here, although that was only temporary. And if you held on to that bearish sentiment, which he has, you would lose all of any gains on any puts you put, right? So also there was no real indication, no real reason to go bearish here as far as any indicators. The real indicator to go bearish, if anything, maybe would have been right here as the MACD line crossed below the signal line and the RSI line started to use the simple moving average right down here as a resistance. Then you got the red histogram, and then you got the clouds changing colors. Now, I still don't think it's ideal to really ever short when you're above and the market bias indicator is green and you're still above it. However, those would start to indicate to you that maybe you should start reducing your position sizes. Okay, so when you dive into his call outs here, you kind of loses a little bit of credibility as far as consistency, because again, yeah, he was right in the short term here. All of that got erased while he was still bearish, right? So if he had maybe changed his sentiment down here to bullish, and then this was bullish and this was bullish, then I would give him a little bit more positive remarks. But he bought puts here over around this area. He and I don't mean this in a really like a diss or anything, but he kind of flaunted his gains on his puts, and then he bought calls, and then he got absolutely annihilated according to him on his calls. He referred it to, he lost as much as a cost of a house in Florida. So I give him credit again for actually calling out his losses as well. This was probably the worst call out right here on August 6th. if you go back and watch my videos for around that time too, I was comparing Meet Kevin to Everything Money, and how Everything Money was saying, hey, this is a great time to buy. They both were heavily talking about a recession, which still might come, by the way. He holds that to possibly be true. But Everything Money was saying it's a good opportunity to start buying. Me, Kevin, was kind of freaking out, I guess, and worrying about his long positions. And I was over here kind of agreeing for the most part with Everything Money. And I was saying, really, if you're worried about the market at this point, you're got already too much in it. But go back and watch my videos too. I'm not just here to say compare Meet Kevin to everyone else, or let's just critique Meet Kevin. Go watch my videos too. And maybe I should just pull some random analysis from previous channels or previous time periods. That would be a good idea. I'm okay to admit if I'm wrong on any of my call outs. I say as often as possible, just like every other YouTuber out there in the finance community, I'm literally just some guy giving my opinion. No one knows what's going to happen. Absolutely no one. But you can use indicators to help sway the odds into your favor, right? So what I want to do right now is I want to go over Meet Kevin's latest call out, which was yesterday, where he once again was bearish. And so that's why I put this dot right here. He didn't give a position per se. He didn't say whether or not he was selling any of his stocks. He didn't give out anything as far as putting in puts or anything. The only thing he really did mention was getting into buying stock in mortgage companies, which actually is a good idea. And I actually think it is. His thesis is pretty solid on it. So he specifically calls out Rocket Mortgage, and he's saying, whether or not there is a recession and a hard landing or a soft landing, and whether or not the Fed is going to slowly reduce interest rates or whether they're going to reduce it rapidly, we have reached the peak and we have plateaued, and the Fed has already started to pivot as far as sentiment and saying that we are going to start lowering interest rates unless there's some sort of inflation data that comes out to contradict our theory. And we're going to be lowering interest rates. Well, that means people are going to be refinancing a lot more. That means people are going to be buying houses, theoretically, obviously a lot more. Now, recessions can affect housing sales, right? But still, nonetheless, people are going to be refinancing their mortgages. The counter argument to that is that a whole bunch of people did buy and sell around the pandemic time and already have those super low interest rates locked down. So if we only get down to like a 4% interest rate, anyone that got it at 3% or, even 3.5% aren't going to refinance. And think about it. If you got it at 4% or 4.5% or maybe even 5%, you just got it. That doesn't necessarily guarantee that you're going to refinance, especially if you've just bought your house, because there are closing costs associated with that. You can't just go in and refinance and then you're scot-free and all of a sudden you have a low payment. Now, it is always smart to do it in most cases, but if you've bought a house, you're far less likely to do that. And you're far less likely, let's just face it out there, people are far less likely to actually do the homework and do the calculations to figure out whether or not it's a good or bad idea for them to refinance. So nonetheless, I do think there is going to be an increase in mortgage, refinancing and just mortgages given out to people. I do believe that we will continue, at least in the short term, to have a housing shortage, which could actually affect the housing sales. So that could be another counter argument to it. And that's why I have in the recent past, I have talked a lot about buying SoFi. I have been buying SoFi regularly every month and just DCAing into it. And I actually don't really care too much what the price is right now because the price is so beat down. And I actually do believe in the company as a whole. And I do believe it is optimal as far as time right now because people, it's not just limited to housing, right? Lower interest rates will help with people with businesses, with refinancing their student loans, all those kinds of things, okay? Consolidating their loans as well, right? So all of that can be a factor. And I'm actually would be interested to see what Kevin, would say and why he's specifically just going after mortgages. It could be because that's his wheelhouse is real estate. So I'm now going to look at his latest call out for the 20th from a technical analysis standpoint. So just remember it's the 20th right here. I'm going to get rid of the distractions and I'm just going to hide the callouts. All right. So from a technical analysis standpoint, let's first bring up the oscillators. Now we are above the zero line on the MACD, which is pretty much MACD 101 for bullish entry. Especially on something like the S&P 500 or QQQQ, oftentimes, let's just get rid of this, it will run. Maybe I'll bring it back up so you can see it a little easier. Bring that up. It'll run for quite a while. And even if there is a breather right after it crosses above the zero line, it doesn't really ever look like it does for much. We'll try it again. That obviously was a fake out right over here. That was that dead cat bounce that brought us oh no, that never mind. I thought that was a dead cat bounce after the recession or the interest rates in 2021. But here's a good example. Actually, no, that's not even crossing above the zero line. I'm trying to find an example of where it, so right here, I guess it kind of dipped a little bit when it crossed above the zero line and just continued. So history has shown us, this could be a little bit of a fake out, but history nonetheless is showing us that when the MACD line goes above the zero line on these indices, they tend to run for quite a while. This right here was maybe let me see. Let me auto that. I just want to see where we're at here. Okay, so this was in that downtrend. So when we had that downtrend, yeah, you're going to get those fake outs, but you shouldn't be going long when you're under the HA market bias indicator anyway. So nonetheless, when the price action is above the HA market bias indicator and it's green, the indicator is green. When the MACD line crosses above the zero line, it will run for quite a while. So that is going to be continuing to be our thesis. And as of right now, there's no reason to believe that this is going to then come down and get rejected or fall straight through the HA market bias indicator. Of course, that can happen, but we're going off of probability, right? Now, you can see a little bit of a flat line, right? A little bit of an exhaustion, right? On the MACD, I think it's easier to see it right here on the Heikin-Ashi candles. A little bit of a flat line. And if we bring up the RSI, you can see just a little bit. It's not a ton, but it's just a little bit of a flat line. So we could get a retest, especially because this was a little bit more significant right here than these past ones. We might really get a retest. So there is consolidation right here. And let's just bring up the VRBP. If you're not aware what the VRBP is, it helps measure support and resistance. And I hate its default settings. I think it's 100. Nope, that's not right. It's another one. I'm not going to waste the time on it, I guess, but I will just get rid of this thick red line right here. And let's zoom it up. You can see that there is a resistance right here. There's some consolidation right here, some consolidation right here. So yeah, we're probably going to come back down, or at least the odds are that we can come back down. But there is consolidation right around this area, and then right around even lower here, right here. There's also consolidation right here. So we could come down, test it like that, and come back up, or even just a little bit come down, right? And then blast through. So where we don't even maybe come down to this area, but we just sort of bounce maybe once or twice and then come through. If we go through, the next one is at 496, which is pretty significantly higher. It's the previous high. you blast the previous high. And then from there, it's kind of easier. Once you're in a position and you're at all-time highs, it is easier to look for an exit position. It's just getting there in the first place can be a little rocky. I mean, if we bring up Meet Kevin's trades a little bit here, or his call outs, it just reminds me of someone that is just struggling to hop on the train. It's someone that's got a ton of capital right here. He's getting scared. Now he's getting FOMO. Now he's getting scared again, and he's right. But now he's trying to, double down on his conviction. And then he's wrong here, but he's selling all his puts, right? So he's still bearish here, but sold all his puts. But if you really are bearish and you're selling your puts, are you really bearish? Because that doesn't seem like you really have conviction. And that's my issue. Is I have the notes here, bought puts, and he was consistent on that because he bought puts, but then he bought calls. Then he sold his calls a day later. Then he bought more puts, and apparently he sold his puts up here. And then he's saying, I'm still bearish, but I sold all my puts because I'm getting slaughtered on them. And yeah, the market's higher here, but I'm still going to be bearish. And my question is, if this comes down, retests and come back up, is he still going to be bearish? Or is he going to switch to a bull then? And look what happened all along the way, right? He got wiped out on both calls and puts along the way. And that isn't how you beat the market. The whole goal to stock trading, if you have any goal whatsoever, it should just be to beat the market. Even if you beat it by 1%, technically it was worth it. Now, maybe it wasn't worth your time, but if you can improve on that over time and you could really beat the market and you can do it consistently over time, that is really where it pays off. But you have to figure out whether or not you're going to follow technicals or not. That's all I have for you. I appreciate you watching. Follow more. Hit the like button if you really like this kind of Meet Kevin tracker thing. I want to do more YouTubers. It's just Meet Kevin's the easiest because he actually really does call out a lot of his calls. I could probably start doing Ricky Gutierrez, but he does a lot of day trading. A lot of traders out there that are on YouTube just do day trading. That's one of the reasons why I started this channel, because there wasn't a lot of swing trading, right? But hit the like button. It's the easiest way to help out the channel. If you want to see more, just hit the subscription bell. I'm not going to spend any more of your time. Go enjoy your evening or your morning, however you're watching this. All right, have a good one. Thanks.